Hello, welcome everybody. Can you guys hear me? Is my audio well? You can just type yes in the chat, please. Testing audio. Okay, good. All right, welcome everyone. My name is Gabi Dahdu. I'm the Chief Market Analyst in One Trading Markets. Today, you're joining us to learn about the Relative Strength Index, or RSI, which is one of the most famous indices out there that people actually use to trade. By the way, I have a degree in finance, technical analysis, fundamental analysis, risk management, and investing 101. And today you're going to be having this webinar with me. All right, let's go through the slides. So here we have the webinar's content, basically. At the beginning, we're going to learn about the history of the RSI. All right, that's it, before I forget. So on the right of your screen, there's a bubble with a question mark in it. So in any time you have a question, just make sure to use it and type your question. And in every break, I will answer everybody's question. All right, so we're going to start with the history of the RSI. Then we're going to talk about what is the RSI, the different parts of the RSI, the math behind it. Of course, you don't really need the math because nowadays every application or platform that you use will have it automatically, but it is good to know that information. How to use the RSI in your trades, divergences, and how to use a divergence to predict the movement of the market. All right, so let us begin with the history of the RSI. So the Relative Strength Index was developed by John Wales Wilder in 1978. So as you can all see, it's a very old indicator. So it's almost 40 years. It's basically one of the most popular oscillators indices in the world today. Almost every trader that I know, professional trader or even a freshman trader, use the RSI because it's such an important index. So the RSI provides signals to tell investors, basically like us who wants to trade, when to buy when a security or a currency or a cryptocurrency, for example, is oversold, and when to sell when it's overbought. We're going to learn together what is oversold and overbought right now. So first, what is the RSI? The RSI, or the Relative Strength Index, is a momentum oscillator. It basically calculates the momentum of the market. So it measures the speed and change of the price movement. The RSI oscillator is bounded between 0 and 100. So the result will always be between 0 and 100, and that's what gives us basically the overbought and oversold zone, which you're about to see right now. The RSI had three zones: the overbought, oversold, and middle zone. So let me just get my laser pointer. Here we go. So this is a chart for the gold on 1 hour base. So each candle represents 1 hour. As you can see in the bottom, this is the RSI indicator. And as you can see on the chart, we have three zones: the overbought zone, the oversold zone, and the middle zone. So these are the zones that's going to help us identify buy and sell signals. Let's move on. Do we have any questions so far? We didn't really get technical yet, or just theory. But if anybody has any question, it'll be my pleasure to answer and help you out. Okay, moving on. Good. So this is the math behind the RSI. This is the equation that we use to calculate the RSI. It's basically 100 minus 100 divided by 1 plus RS. Now, what is RS? It's relative strength. How do we calculate that? So the usual settings for an RSI is 14. What does that basically mean? So it calculates 14 candles, and that's what gives us the signal right here. So 1 to all the way up to like 14, for example. Let's say 14 is about here, and it gives us this point right here. So it calculates the average gain. So the sum of the gains over the past 14 days. So let's say we have 6 days that we gained. It combine all of them, and then we have 8 days that we lost. That will be 14 basically, and it divide them on each other, and that gives us the relative strength. Then we apply it to this equation, and that's what gives us the RSI. But like I said, most platforms or anything that you use to trade actually have this on like the default setting, so you don't really need to do any math behind it. But it is good to understand everything about something when you're trying to invest. After all, you are putting your money, you're investing your money, you want to make profit, you want to minimize the risk. So it's always good to do more research and understand how a certain strategy actually works. So let me show you for an example before we start with the overbought and oversold zone. So this is our platform, MetaTrader 5. Okay. So as you see, this is the chart. This is what a usual chart looks like, and you can actually customize this as you like. But let's say we wanted to add an RSI and see how the market is moving right now. So we go to Insert, we go to Indicators. So what, like we said, it's an oscillator, and we see relative strength index. We click on it. The default is 14, like I said, and we click OK. And you can see the RSI right here on the screen. This is how it would usually look like. Let's go back to our presentation. Okay, so there are two main ways to actually use the RSI. The first way is the overbought and oversold zone. The second way is called a divergence. So what is the overbought and oversold zone? So this is a chart, by the way. This is an Apple stock chart on a 1 hour base. So each candle represents 1 hour, correct? So as you see, the RSI is moving, but sometimes it's crossing above to the overbought zone, and sometimes it's crossing below to the oversold zone. Now, what this basically gives us is a sign to buy or sell. One thing you got to remember, nothing is 100%. There's no strategy where it's like if somebody tells you like this strategy works 100% of the time, you're always going to make profit. That's a lie, because if there was such a strategy, you'll see a lot of people very, very rich. So nothing is 100%, but this does increase your chances of making profit while minimizing your risk. So you're basically calculating how much you're going to gain against how much you're going to lose. So let's talk about the overbought and oversold zone. So notice here, for example, we notice how the market went to the overbought zone. Let me get my laser pointer. Okay, here, sorry. Yep. So notice how the market went to the overbought zone. If you remember from when we started here, so the RSI provides signals to tell investors to buy when the security is currently in the oversold and to sell when it's in the overbought. Okay, so here we see we have the overbought zone, which basically tells us it's a sell signal. We notice that the RSI is dropping to the middle zone, and that's when we sell. That's the sell signal. And if you notice, it dropped roughly around here. So if we sold here, notice how the market actually dropped because of this signal alone. And that's what I mean by when I say buy and sell signals using the overbought and oversold zone. For example, here, it dipped to the oversold zone, which basically tells us that we have a buy signal zone. It started to cross, it crossed over, which is basically gave us the signal to buy. So we bought here. Notice how the market actually went back up again. And before it started dropping, the RSI dropped with it. Now, I'm going to put this in terms that's very easy to understand. Let's go to paint, for example, okay? Okay, so this is paint. Imagine with me, let's grab a brush. Okay. So imagine this as a spring. What does a spring usually do? So when you pull it up, if you keep applying that force to it, it will stay up. But as soon as that force, as soon as you get tired, the spring will go back to its original spot. So for example, let's put a line here, a line here. It's a little bit big, but it's okay. Sorry about my drawing. I'm not very talented at drawing. Anyway, so if we pull the string up with a force, okay, and we reach this area around here, after a bit, if we release that force, the spring will go back to its original spot, which is here. The same applies to the bottom. If we pull that spring to the bottom, it will reach the oversold zone, which is basically our zone. And after we release that tension and that power, it will go back to its original spot like this. And that's basically how the RSI works. So we have, let me get my laser pointer. So we have 2 points, the overbought, oversold, and this is our spring basically. When we pull it up, it's gonna go down. When we pull it down, it's gonna go up. And that's what gives us the buy and sell signals. Is everything clear so far? Does anybody have any questions? Yeah, so of course, the RS, like I said, nothing is 100% in trading, but the RSI does give you a better chances to identify buy and sell signals. Like let's look at a real life example. Like let's go to TradingView, which is an application that technical analysts use. You're gonna see right now. There we go. Okay, so this is the DXY. This is a live feed, by the way. Okay, so here we see the chart. This is the dollar currency index. It basically tells us where the dollar index is right now. Let's say we want to add the RSI indicator. Okay, so the RSI is this yellow line. Okay, the sorry, the blue line is the moving average. I added that. The usual RSI doesn't have that, but the RSI is the yellow line. Now let's look at the oversold and overbought zones. So we have here above 80 is overbought, below 20 is oversold. Remember that. So between 20 to 80 is the middle zone. Above 80 is overbought, below 20 is oversold. Let's look what happened here. This happened 3 hours ago. Notice how the RSI right here went back up. It reached the overbought. We noticed, and this basically gave us a signal that it's probably time to sell. As soon as it started dipping, we see it dipping, it's going back to the middle zone, we sold. So we sold around here. Let me get a closer look at this. Here we go. Noticed? See how we know here that the RSI is going up. It broke the overbought, and we noticed the curve starting, which basically give us our sell signal. So we basically sold around, let's put it this line. Okay, so we sold at 96.058. And that signal, when we sold, already made some profit. You can notice here, the market dropped from 96.0, let's say 60 basically, all the way to 95.881. And that's basically what gives it the buy and sell signals. That's the first method of actually using the RSI. It's very simple. Like I said, it's like a spring. It's one of the most common and most used indicator out there. This is a huge profit. It depends on how much you're trading, but this is a very good profit. Let's look at something else. Like for example, let's look at the crypto market. Let's go with Ethereum USD. All right, so this is the Ethereum USD, okay? Okay, here we have an example right in front of us. This is on a 1 hour chart, so each candle represents 1 hour. So 5 hours, 6 hours ago, when Ethereum actually reached all the way to $2,160, we noticed that the RSI here had dipped to the oversold zone. See this? And this gave us our buy signal. So we basically bought around this point. So Ethereum price was 2,191. After the RSI jumped up, we noticed how the market actually moved from 2100 all the way up to 2380 right now. So we have, if you let's say bought one Ethereum, I'm going to keep it simple. If you bought one Ethereum, by this move alone in 5 hours, alone, because you followed the RSI strategy, which is the first strategy, there's still another one that you're going to learn next. You actually were able to make profit from 21, basically let's say 22 to 24, so almost $200 in a matter of 4 hours. And that just doesn't work on, like, the RSI isn't just related to 1 hour chart. Like, we can look at this for long term. Let's say we want to go for a 1 day chart. 1 day chart, basically each candle represents 1 day. So notice here how we are right now in the oversold zone. We're still in the oversold zone. But as soon as the RSI starts moving up and crosses to the middle zone, that's going to be our buy signal. And the market should probably move something like this. Something like this, you're basically talking from the 2400 right now to the 3000. And that's basically in a matter of 2-3 days. If you're like trading cryptos, for example, you made $1,000 out of your investment. Your investment totally was 2,300. So you almost made 40% return on your trade. That's how effective the RSI is. That's why people love it. That's why people use it. Notice here as well. Let's go to, for example, here. Notice how the RSI crossed above, and as soon as it crossed down, we sold here. As soon as we sold here, notice how the market, see how the RSI right here just dipped below to the middle zone? So it dropped from the 30, almost 4,000, 3,953, all the way to 2,700, which is $1,200 profit. That's why the RSI is so strong. One thing I actually got to mention, you don't make profit from the market going up alone. No, you can actually make profit from the market going up and going low, sorry. People always think about this the wrong way. People think if the market isn't going up, there's no chances for me to make money. That's like really incorrect, especially in trading, because in trading you can make profits selling and buying. So you can actually make profit when the market is dropping down, and you can make profit from the market actually going up. People always seems to forget about that for some reason. And that's basically how the first method of the RSI works. Any questions so far? Was everything clear? If you have any question, please type them in. If everything was clear so far, please just type yes or something. Okay, good. Let's move on to the second part of the RSI. I'll grab my laser pointer. There we go. Okay. So the second thing we got to learn about the RSI strategy is called divergences. Now, some people think divergences, what is that? I heard about that before. That is correct. In my last webinar about the MACD, which is the moving average convergence divergence indicator, it also had divergences. Now we're going to explain it again for the people who weren't with us in our last webinar. So what is a divergence? A divergence is when the price of an asset or a stock or currency is moving in the opposite direction of a technical indicator. So what does that basically mean? It means if the market is going up, but the RSI is going down, that's a divergence. Because remember, the indicator always follows the market. If the market goes up, the indicator goes up. If the market goes down, the indicator goes down. So when that doesn't happen, it creates something. That something is called divergence, which is basically, like I said, market going up, but the indicator is going bottom. Now we have two main types of divergences. So we have a positive divergence, which signals, basically, it signals us that the price could be start to moving higher soon. So it occurs when the price is moving lower, but the technical indicator is moving higher, or showing bullish signal. For example, the market is going down, it's dropping, but the indicator is going up. It's giving us like an early signal. Think about it like this. The RSI has two steps to confirm. Divergence doesn't always happen, but when they happen, they're really important. So you always got to keep your eyes on them. They're basically like an extra step to confirm the buy or sell signals. Now, as well, we have a negative divergence. We're going to see some examples right now. We have a negative divergence. Now, negative divergence points to the basically to the lower prices in the future. It tells us that the market could be dropping in the near future. So it occurs when the price is moving higher, but the technical indicator is moving lower, showing bearish signals. Let's look at some examples on picture, then we'll check some real life examples, like we'll search on the chart together and we'll see how divergences actually work. Now here with me on the screen, we have the gold market on a 1 hour chart. So each candle represents 1 hour. Now notice here how the market is moving up from point A to point B. But if we look at the indicator is actually moving lower from point A to point B. So basically the market's going up, but the indicator is going down. What is that? Look at here, the price is moving higher, but the technical indicator is moving lower. It's a negative divergence. And that tells us that the market in the future has some potential to drop. And notice here, after the divergence has ended, the market started dropping. It actually dropped from 1767 all the way to 1748, which is almost like 20 points, 20 pips on the gold market. That's huge, especially if you're trading like with a lot or like half a lot or something like that. Depends on your type of trader. This is the power of a divergence. Let's look at another example right here. So this is the Euro USD on a daily chart. So notice with me, daily chart means each day represents one candle. Notice how the market is moving up, but the indicator is moving to the bottom. And this actually continued here. The market went all the way up here, which is this point, but the indicator went lower. And notice how the market actually reacted with this divergence. After the trend has ended, notice how the market kept dropping down, 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 and down. Moved from 1.26 to 1.20, which is almost 660 pips. Let's look at another divergence. This is the SPDR, basically the S&P 500 ETFs. This is on a 1 week chart. So I meant to put multiple examples with multiple time frame so you can understand that actually this indicator works on not just like a 1 hour chart or a 5-minute chart or a 1-day chart or 1 week chart or a yearly chart. It works on everything. That's the beauty of it. We have two divergences here. The first one is this one. Notice how the market is going up, but the indicator is going bottom. It shows us early signs that a drop could be happening soon. And as we noticed, the market moved sideways a little bit, then it dropped really hard from 216 all the way down to 184. Now, again here, let's look at the divergence, how it happened, the second divergence. The market was moving lower, and we are taking the lowest point that the market actually reached. So we're being very thorough, very technical with this. But the indicator went up, even slightly. Like it doesn't have to be a line, like like very strong decline. No, even slightly. The indicator is moving up, but the market's going down. It gave us early signals that the market is about to pull a bullish move. And notice how the market actually went back up all the way to 220, sorry. And this is the power of divergences. It's a very useful tool to help you understand how the market is moving, when there's momentum going in the market, when there's a buy power, when there's a sell power in the market. Is there any questions so far? We're almost done. It's a very short, very good indicator. It won't take much of your time. We're just going to look at some real life examples right now and see how they work. And if anybody has any questions, please make sure to ask. My job here is to help you understand this as simpler as is possible. Yeah, of course. Okay, I got your question. So let's show you. This is our platform, okay? So you can draw on it. That is correct. See here, you can draw lines from, like, let's say here to here, and you can move them basically if you want to use our platform in OTM. Like I said, OTM basically gives you the ability, like our MetaTrader 5 has so many products, it's just insane. Like there's from stocks to cryptocurrencies to commodities like metals, gold, silver, like to every currency out there. Like the amount of product that you can actually trade is really insane. Like it's really good. So same here. This is where you draw your indicator if you want to, like, for example, analyze what's going on. So let's look and see if we can find some real, like, we can use this one or we use TradingView. It's up to you guys. This is our sell signal if you noticed here. Oh, let me show you an example here. Noticed this line and this line. Sorry about that. There we go. Now it won't move. So the indicator was slightly hinging down. Notice how the market actually moved to that. Let's take a point, this one, sorry. So from here all the way to here. So the market was given early signals that a divergence could be happening. And notice when the divergence happened, notice if we move this point from here to here and from here to here, notice how the divergence happened. The market was going down, but the indicator was going up. So if we go down here, the trend ended around this area after this drop. Notice here 1, 2, 3, 1, 2, 3, and the trend started pulling back up again. Now remember, for trading, it's always important to look at the current time frame that you're trading on. If it's a 1 hour, if you're a swing trader, if you're like watching the market and sitting with the market 24 hours, like if you're, some people like to trade on a 30-minute time frame, on a 5-minute time frame. It differs from person to person from your trading style. But this is one of the strategy that you can use other than the divergences and the the oversold and overbought zones. Basically, understand it like this. If the RSI is above 50, you're in a bullish market. What does that mean? That means the market is moving upward. Notice here, this is the 50 line. Notice how the market is moving up. Okay, but notice here after the drop, it drops down. It basically tells you that the market at this time is moving bearish. So that's the power that this indicator gives you. For example, let's look here. Let's go to another example. Let's go to Bitcoin, for example. I know a lot of people are interested in Bitcoin. Bitcoin USD, for example. Here we go. Okay, let's delete all of that. So this is our 50 line, okay? It's below 50, we know the market is bearish. So the market is going down. Notice how the market actually went down. It didn't stop. It moved to 50, but it wasn't able to cross 50. So that gave us our confirmation that the market is still going down. And the market did go down from almost 50,000 to 35,000. Now let's look at how the Bitcoin is doing right now. This is on a 1-day chart. Okay, so each candle represents 1 day of trading. We have reached the oversold zone, and that's a very strong sign for us if you're using the first strategy. The market has started moving up, but it hinged down again. So as soon as we see the market reaching this level, which is 30, we know it's a buy signal. So in the next few days, if the market didn't move something like this and stayed in that zone, which rarely happens, like most of the market, see, like it goes up, it dips down, it goes up, it dips down, like it never stays for long. See, only here, like it stayed for a couple of days, but that's when you got to understand where to hold. It's not a good place to buy or sell right now because the market is understanding, it's following up the direction of the supply and demand. So you're holding. And as soon as it dipped down, you sold. So for example, if you followed this one right here, as soon as the RSI started dipping down, we see it crossing, we sold. So we sold here. This is the candle where it actually crossed. The Bitcoin was at 40,176. Okay. We sold. First drop reached 30,000. That's a 10,000 drop in a matter of 2 days, just so you can understand. So if you had one Bitcoin and you sold it here for US dollars, then rebought here, you made $10,000 in one day because the price of Bitcoin was 40,000. But like I said, this differs. In CFDs, it works the same. CFDs is basically like virtual estate. That's how I can explain it. So it's basically you buy the amount with the leverage to trade on a higher leverage. So same, we saw the market going back up, so we bought here. Then we saw it dropping down again, so we sold here again. So every move in the market gives you an opportunity to actually make profit. Buy, sell, buy, sell. Let's see if there's any divergences. Okay, let me show you this divergence. This is a very important divergence. Notice anything? The market is going up. But if we take the same point, the indicator is going down. Notice how this divergence actually gave us an insane opportunity to actually make profit. We noticed that the market was going up. We noticed how the market is moving, but we look at the RSI indicator and we've seen the indicator going down. So we have an early signal that the market is dropping. And notice after the RSI divergence has ended, notice how the market dropped. So it actually reached, so it was at 63,676. The first drop was 48,700. That's almost 14,000 drop in a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9. So 10 days. That's how you got to understand it. Same here. We notice how the market just moved up above from the oversold zone. So we know it's going to have a bullish movement because it didn't reach it. It bounced off it. So we bought here at the 48, 49,000 all the way up to here. When we see it crossing below the 50, we understand the market is turning bearish. We sell again and notice this drop from here all the way to here. This is if you're following every trade. But let's say you're a guy who likes to trade once every 2 weeks or 3 weeks. So you sold here and you just waited. So in a matter of 20 days, the profit that you made from 63,000, 64,000, all the way, this is the lowest point basically, all the way to 30,000. That's a 30,000 drop in a matter of 20 days, which you could have seen if you know how the divergence and RSI works. It gave us an early signal about the drop. That's the beauty of this indicator, that the early signal that it gives is so strong. Divergences, like I repeat, if you see a divergence, especially a strong divergence like this one, see the curve is good. It's not just like almost like this. The curve is good on a big market. This is no speculation. Between almost 80 to 85% of most of the time, the divergence turns out to be true. There is something as a fake divergence, which is basically like, for example, let me show you what it is. So notice here, this divergence was too short. It's a divergence, but it was too short. But if we follow it, we actually could have made some profit here. So it did give a strong sell signal, but then it went on and on to create even a bigger divergence that caused a 30,000 drop in 20 days, which was basically your profit. That's a 50% profit in 20 days. So let's say if you've invested $50,000 worth of Bitcoin, you could have made in 20 days 25,000. That's just insane profits. That's this is why this RSI indicator is so strong and it's so used by almost every trader I know, because it's so simple, it's so elegant, and it's so helpful. That's basically how the RSI work. Here is my social media. This is my Instagram and my Telegram channel. I usually just post a lot of news that's happening in the crypto market, the Forex updates every day, gold update, and my Telegram post details analysis and pictures, etc. Now I'll be taking your questions. Okay. So this the sharper the descent, the strong. Yes, that is correct. The sharper the descent, the stronger the divergence. But you got to remember that if the market is moving like, let's look at a real life example. Oh, look at this. So if you go even further, such a sharp, actually, each one of these created a divergence, and each one of these is an opportunity to trade. Then it went back to here, and we can actually make it smaller, like from here to here. This period of time was really strong for people who actually traded Bitcoin. They made so much money. Bitcoin trader made so much money the in this period, which was roughly in April. Yeah, April, February, and May. From here as well, notice another divergence from here to here. And the big divergence that we followed, every single move of the divergence gave us this huge drop. Here also, when you add other, so the beauty of technical analysis is you can add more strategies to the strategy that you're using to confirm. So for example, I don't know if you guys are have any knowledge about chart patterns, for example, which like two bottoms or like double tops or head and shoulders. These are also technical tools that we use to identify trends. And we can clearly see one here that also anticipated this drop. If you noticed here, for example, that's the first shoulder, first head, second shoulder. This pattern called double heads, double shoulder, which is usually a bearish sign. So, but this basically pattern gives us an kind of a late signal. So the only way we can actually trust this pattern is when the neckline is being broken, which is this line right here. So you had to wait until the trend actually reached this area and drop below it to sell. But the RSI already gave us such an early sign that the drop is happening. So the profit from here, which is basically 44,000 to 30,000, which is 14,000, is good profit. Don't get me wrong, it's good profit. But using the RSI alone, for example, gave us much better profit, which was 30,000 profit. Just speaking about one Bitcoin. But see how the beauty of it, like you can combine multiple strategies to actually help you maximize your profits and minimize your risks. If you guys, I see some of you were in our last webinar, which was about the moving average convergence divergence indicator, which also gives divergences signals. Look here, we can actually see the divergence signal right here, from here all the way to here. It's another divergence. This is another indicator to confirm your basically theories that you want to sell and buy. And if you guys missed it, don't worry. In the near future, I am planning to redo some of my old webinars to help newcomers understand better indicators and more indicators to help them trade. Any other questions? Yes, it works on every time frame, from daily to weekly to yearly to monthly to 30 minutes. Like, hey, let's go to 5-minute trade, okay? Let's just remove this one. Here we go. Notice here, we breached the overbought. We sold right here, and notice how the drop happened. Keeps happening. It works on every single time frame. That's the beauty of this indicator. Let's see if we can find any divergences actually. This one is higher to lower, higher to lower, lower to higher, lower to higher. See, it's a little bit technical, but like sometimes when you can spot the right divergence, Like you can make such a good profit from that while minimizing your risk because you understand that you're trading with a base knowledge on how the market usually moves. Remember, nothing is 100%. Remember that. But it gives you an advantage. Like if I told you like you have a 70% chance that you'll make profit out of it, would you take it? Yes, I would take it. That's a good chance. It's above average, which is like 50-50. And that's where technical indicators helps us with. Let's see if we can find a divergence. Guess that's kind of a divergence. No, not really. From here to here. This is kind of a divergence that gave us some signal. It wasn't a big signal, but it did give us a signal. Notice here. So if we move from here to here, the market was moving up. No, the indicator was moving up as well. Sorry, it's like this. From here to here. It is a straight line, so it is a weak divergence, like I said, but it did give us some kind of signal, which basically wasn't really big, but wasn't too bad. Let's see if the market like this, market like this. Okay, look at this divergence. This is what gave us this signal. So the market is going down, okay, but the indicator was going up. It gave us a buy signal when this divergence ended. And notice how the market actually moved from 34,000 all the way up to 35,600, which is basically like $2,000 worth of profit if you're trading on one Bitcoin. That is. And even if we continued, we notice how the market kept pulling up and reached 36,000. Exactly, yeah. Any other questions? Okay, doesn't seem like anybody has any more questions. If you guys find this helpful, if you guys have any questions, you can always contact me on my Instagram or my Telegram group. I don't think you can contact me on my Telegram. You can only read, but on my Instagram is actually, let me just show you too. So it's gabi.dahdu. You can always contact me there. It was a pleasure doing this webinar for you guys, helping you understand how the strategy works. And I wish you all happy evening, and I'll catch you guys next time. By the way, next time I am preparing a webinar on cryptocurrency, what is cryptocurrency, blockchain technology, stuff like that. So make sure to turn your notification in Instagram so you can actually register for that webinar. It's going to be super helpful for people who are trying to get into the cryptocurrency world. All right, I'll catch you all next time. Take care.